It is time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Kenny Polcari is here in person, senior market strategist, Slate Stone Wealth. I'm glad you're here today. Kenny, good to see you. We just had Bob Elliott, who was telling us and making the case for that the recession is coming. How are you feeling?
I do think the recession is coming. I'm actually surprised it hasn't come yet, right? I will say the Fed has done a decent job of kind of making it elusive, right? I do think that it's coming. I suspect probably by the end of the year, early this year, which is, I thought we were going to have it in June already. That didn't happen, but I do think it's coming. So I am on Bob's side that I think it's going to be a tougher road ahead.
And is that a buying opportunity?
Well, I think it will be. I think you have to be careful at first because depending on the depth of it, some people think it's going to be a shallow recession. I think it's going to be a bumpy recession. So I think you have time to take your time. Although I think there are going to be certain names, as always, that create opportunities early on. So I would never say get out. I'm not someone that gets out of the market. I'm always in because, as you know, it's about time in the market versus timing the market. And I'm not really a day trader type as much as I am a long-term investor type. So I always think there's opportunity.
All right. That being said, let's check out a name you have. First of all, we got to give Kenny credit because he sent in C3AI prior to today's market open. You sent it last night. It's up 6.5% today. So you already, got the winning move. But tell us a little bit about C3AI.
Well, and I have it as a buy, right? That's why this is so exciting.
Made 6%.
Look, it is in one of those sectors that's hot for sure, right? Artificial intelligence. Certainly everyone's talking about it. It's very much in its infancy. It's going to continue to be a topic that we discuss all the time. So this is a holding for me. It's a long-term holding for me, but I'll take advantage of when I see prices pull back. And look, this thing was up 355% as of June, but it's pulled back, right? Came in about 40%. It's up about 174% right now, but it's come back to a level where I think it's going to find support down at the 29-ish level. And I think it's in this $29-$35 trading range. And if it holds here at 29, which it is obviously 6% today, then I think, we can test that 35 range again. But let's see what Ben has to say.
Yeah, well, I want to hear what Ben has to say because it's far cry from the $48 high when you're talking in the 20s range, and that sort of, you could even get that on a pullback there. It's at $31 today. Ben?
Nicole, Kenny, I can see that $29 level as a significant area. I can also see why Kenny's smiling so much today, right? Having called this stock last night, I saw the email go out, and the big move we're seeing here today, you can see it on the right side of your screen here, quite the bungee jump to the upside. But I also want to point out how we have been really just balancing. If you take a look around this $29 level, this chart's a pretty good example of the 2 phases of development that I look for. First and foremost, prior to the big move down, you can see that we were a bit sideways, and then again a high conviction move lower transitions into this more horizontal type phase playing out. The big move up here kind of has things a little bit out of whack here right now, but this is a 5-minute candle chart, right? So let's not get too married to this more intermediate, or I should say more granular time frame. Let's dive into a little bit of a longer term chart here, and in this instance you can see a pretty well defined trend to the downside. It goes from the top left corner up here around $45 all the way down to, over the last few weeks, around $28. And in this instance, it looks like the bulls still have some heavy lifting to do. When I say that, right, we've got the area here that we sold off from, again, that big move lower we just looked at from around 36 to 28. And you can see that's kind of the top of the range that we've been in over the last couple weeks. Again, holding above that key 29 level. As I take another step back, I want to show you where we are on the longer term chart here. Another one that kind of feeds into this bearish narrative as long as we hold below the $50 level. But 29.30 in this instance, we're looking at 31, a key area right now, I think, for AI. Longer term trend to the downside, seeing energy to the upside on the more granular time frame, but still some heavy lifting to do, as I like to say, for the bulls.
So a heavy lifting for the bulls. So he's not sold on this one, Kenny Polcari. That's what it sounds like, because he's really looking at the downtrend.
Right, but so that's what makes a buyer and seller, right? There are buyers and sellers in the market. I like it. I enjoy his analysis, but I'm taking the shot.
Okay. All right, next up, we're going to take a look at Comstock Resources. This was trading at about $11.50 today. Why is this one on your radar?
Well, because it is an oil and gas exploration company, right? It's off about 14% so far this year. But look, it was up significantly in 2022 as the whole sector was. It was up about 72% in 22. So the pullback and underperformance this year in the whole space makes some sense. And the XLE you see is the broad sector is really flat on the year. But look, fossil fuels aren't going away. Renewables are still very much in their infancy. Comstock sits in a tight place with coal and nat gas. I think it's been stuck in this $10.5, $12 range.
Right.
But I think that if we pierce it, then I think we have a chance to test 16 on the upside.
And it had some worse than expected quarterly results just recently on the 1st of August. You did have Piper Sandler trimming the target. I see a neutral there. I see a buy rating from Stifel. Ben, your turn. Comstock Resources.
This is another one that I appreciate the optimism, and at some point these names are going to turn around, possibly the move that we're seeing in AI, the start of something bigger there. But in terms of CRK, I don't really see anything at this point that invalidates the working assumption that we are and have been and continue to be trending lower at this point. Taking a look here at the 15-minute candles in this instance, just going back the last couple of weeks of price activity, and what I notice is every 60 cents we have these areas of consolidation where the market kind of regains composure, transitions into this horizontal phase, is a lot more overlapping and rotational relative to the conviction associated with the separation between each one of these two. And again, in this instance, as you can see, currently balancing around 1180. Now, if we were to get up above 1240, you can see on the left side of your screen, it's the last area consolidation that we formed prior to the one that we've been in over the last couple weeks. I think that would be definitely something to get excited about. It would invalidate the working assumption that on this, again, more granular time frame, we're actually trending lower. But that still seems to be valid at this point as long as we remain below 1240. Taking a look here, that's also apparent on this longer term chart here, the longer term time frame. This goes all the way back to this time last year. We're talking August of last year, and we were balancing around 19 in the fall of last year, beginning of November. We broke down and then went rotational around 15. Pretty good example, again, of these two phases of development and how we're currently trending lower, where areas of value continue to establish at lower and lower levels, and currently right now value is being established around 11. So again, in this time frame, it looks like the bulls would need to get up above 15 before you could get really excited here. But you can see a pretty well-defined trend here in both instances, a more granular time frame, and then again, as we look at the daily candles here going back to the last year, similar pattern. Areas of value moving at lower and lower levels with limited retracement to the upside.
I think that, thank you for that. So, and I think a lot of these names get tied into oil itself and, where oil is headed. Sometimes it could be a rate play, a dollar play, and some of these names could move along with that. You saw Ben's charts there, Kenny. Final thoughts there?
So listen, if I liked it at 19, I have to love it at 11, right?
Yeah, exactly. That's what they say.
And I love his charts. They're perfect. But I got to tell you, I'm bullish on energy the rest of the year. I think this one's at a level now where it's going to provide, a burst up. And now look, like I said, it is off 14% year to date. So it's underperforming. And I think if energy turns around in the second half of the year, that this is going to be one of those names that benefits.
Okay, next up, APCX, and we're looking at AppTech. And a smaller name, but had a recent pop, a nice run up. 6 months, it's up 100%. 1 month, 100%, I should say, because that's the recent pop. Your thoughts on that one?
It is this is a name that I own. It's also in the digital, it's a fintech in the digital payment space. But you go back and you search some of the news, you'll see over the last 6 months, there've been a lot of partnerships and exciting things taking place at this company. Thus, we've seen the pop from, the low 150 up to as high as 5 just a couple of weeks ago. It's pulled back a little bit. They just introduced a new product, which is a competitor to Venmo, and actually it's going to be a real competitor to Western Union because it's going to allow people to send dollars directly to South America, which they can't do on Venmo right now. You can send it to Brazil, you can send it to Mexico through some bank relationships they have. So I think there's a lot going on there. This is pulled back, traded up to high as 5 just a couple of weeks ago. It's trading back now like 3.5, but I think it's volatile. Certainly it's a smaller name, so you have to be prepared for that. But I think the upside is here, and I think we challenge certainly 5 again as this news filters through the market.
Yeah, Instacash it's called.
Instacash is the name of the Instacash is the name of the partnership. Yes,
that's with peer-to-peer payment system.
Right.
right? Is that what you're
That's
talking about?
That's the one. And that's the one that's going to compete with Venmo, and it's going to it's really going to compete with Western Union, because, you know, right now, if you want to send money to South America, Western Union is the place to go.
Okay.
There is a lot going on here. I'll give Kenny that one. In terms of price activity, we've seen some big moves. It's kind of a combination of the two conversations we've been having. Going back to the example that we looked at in terms of AI, high conviction to the downside on the left side of your screen, and then much more sideways as of recent. But you can see in this instance, again, we've been, well, sideways around this, around 330 level. But this came after a big move to the downside, which came from around $5. So again, I'm sorry, 330, I said a little bit more like 370. But let's take a look here in terms of the areas of consolidation that I went ahead and identified. And I want to point to, again, the fact that we're looking at a 5-minute candle chart here, right? So you don't want to put too much cred in this one. You want to take a step back, but just looking at the most immediate price activity, overlapping rotational after high conviction on the downside, this is the form of acceptance, again, around this 375 level. Let's step back, though. Let's not get too into the 5-minute candle here. And you can see this is where it gets a little busy, right? You've got a very well-defined trend environment to the upside, which kind of topped out after we spiked around 484, the move we just looked at, coming back down and then sideways, but still holding up above a key area around 330. So there's a possibility that we're just kind of forming this larger area of consolidation around 360-ish, we'll call it, but definitely losing some of that momentum to the upside. That's not what the bulls were looking for in terms of that breakout, the attempt to get something going near that $5 level. They wanted to see a new area of value forming at a higher level, so a flag flying there. But I also wanted to point to where we are in terms of the 50 to 200-day moving average, because you can see how that recent spike that we looked at fell short of the highs that we saw back in beginning of the year around 537, well above the 50-day moving average. Some of the momentum we've seen to the upside. The question is, are we starting to roll over here after failing again just shy of that $5 level and shy of a key area that we established earlier in the year?
Are we starting to roll over again? And that's his question.
So I think if it holds, like Ben said, if it holds at that 330, 350 level, which is right where it is right now, I think, yes, then I think there's the opportunity. And look, if this thing even trades back up to, you know, $4.5 or $5, that's still like an 80% move from where it is.
Huge, right. I mean, 1 year is already 500%, and it's way off the highs, so I guess it has a lot of potential, this group.
But it's volatile,
overall.
So understand that.
Yeah, understand that. And it's a smaller name, so it can have a lot of volatility. I think you make a good point with that. Kenny Polcari, good to see you in person.
It is always a pleasure to be at the New York Stock Exchange with you.
Home, your old home. All right, thank you, Kenny. Until next time, thank you for the big three. And Ben Lichtenstein, thank you as well. Always great on those charts with us. Thank you.